Are you guys, as CPAs, are you concerned about those things that are benefits going away in the next 4 years? That tax code
Absolutely,
changing?
absolutely. This is a major benefit, and this is expiring. This 2025 is the last year. It started 2021. This pass-through elective tax, pass-through entity tax. Excuse me. It started in 21, and it was for 5 years. So 2025 is the last year. And imagine for $1 million profit firm, just $35,000 in taxes will just increase when this provision expires. So
Mhm.
that's a major problem, and we will have a lot of explanations to do for clients because obviously clients rely on us. They rely on us to do the proper planning for them to save them as much as possible. They don't really understand or know when these tax codes expire or when they take in effect. So we will have to explain to them what's happening. I hope other provisions will come up that will help our law firms to save taxes, and we're always looking for ways to save our clients in taxes because last thing we want to do is our clients to pay more taxes than they have to in a legal way.
So you have to stay up on it, and we're glad that you do.
I love it. This is the portion that I really love doing, the tax planning and strategies, because we can really come in here and save our client significant amount of taxes. Just in this example, look at just one strategy saved this client 35,000. Let me give you an example. I just signed up a new client a couple of weeks ago. Have not been taking advantage of this PTE tax. I don't know because if it's because the CPA didn't know about it, his their previous CPA, or if they just didn't have the agreement to work with them throughout the year. I don't know what the situation was, but I know that they haven't taken advantage of it. And by the way, in order to take advantage of this kind of strategies and implement it correctly, you need proper planning. If you come to me now in January and ask me to implement this PTE tax deduction, I can't do that for 2024. It's too late already because there are some rules that you have to follow to be able to qualify. We can do it for 2025, which is the last year, unless it gets extended. So I'm assuming they just didn't have the open conversation and the planning with their previous CPA, which is why they missed out on this opportunity. But to give you an idea, it's a two-partner firm making about $4 million in profit. Okay, $4 million in profit for 4 years, 21, 22, 23, and 2024. Those are the 4 years they missed out on it.
Wow.
$4 million, they're in California. 9.3% of $4 million, what is it? We're talking about 93,000, about 100, roughly $350,000 in deduction per year that they missed out. With
Sounds like
that,
they left the right accountant. They left one to join another good one.
that's what I want to think. Yeah,
Mhm.
but yeah, we will be able to. Unfortunately, we cannot go back and
Right.
help them for the past years because they missed out on the planning opportunity, but we can do it for 25. So for those 4 years, with 350,000 in deduction per year, you're talking about over 100, 150,000 a year, about 100 and 120, 30,000 a year roughly. And over 4 years, they missed out around $500,000 in tax savings
Oh my goodness.
just from this strategy,
I
just
wish
one
I was a
strategy.
fly on the wall during that meeting and the face plant that went on
Yeah.
when they realized that. I mean, it's so good that you know the current tax code and that you stay on top of it because you would have saved them major amounts of money.
We would. Unfortunately, we cannot go back and change that, but we could change the future and we can start implementing it. It's again, unfortunately, it's just one more year left for this tax provision to take advantage of it, unless it gets extended. But we can take. They will save about 150,000. Their income has grown even more than last year, so they will save about 150 to $200,000 in taxes, not deductions, actual tax dollars this year just from this one. But we are already implemented a couple of other strategies that I think we can save them at the very least five to $700,000 this year in taxes.
When
So
will you see, Emile, when will you see changes start coming down from this new administration?
I think we'll start seeing things coming pretty quickly here. They're already talking about this increasing the salt limitation. So they're already discussing it, and I know Trump has mentioned that he will reduce the taxes. He will help small businesses, and small businesses really are 10, 15, $20 million revenue clients or companies are still considered small businesses. The promise is out there. Will it happen? I really hope so, because these firms work really, really hard for their money, and it's a shame to give away 50% of what they make.
It sounds like small businesses are on his radar. I mean, just listening to him today, he was talking about how small businesses and filing for small businesses went up in the last 4 days. So we can only hope that people, continue that momentum if he does implement some promises. So that would be great.
I
Great for
I
tax
hope so.
professionals.
I hope so. I hope so too.
Yeah.
Some other things that are changing. Here, real quick, let's go through it. The mortgage interest deduction is up to now capped at up to $750,000 in mortgage balance. So if you have a mortgage exceeding $750,000 currently, you cannot deduct the interest exceeding that $750,000 balance. That's expiring, and as of 2026 and on, unless it changes again, that will go back to $1 million. So that's a little bit of help for homeowners to deduct a little bit more mortgage interest on their primary resident. And they can also, going forward, which they cannot now, but hopefully starting 26 and on, deduct more interest on their home equity debt for up to $100,000. So basically, you can deduct your starting 2026 and on, you can deduct mortgage interest on up to 1.1 million versus 750,000 currently. So that's a little bit of help. That's a better situation. The lifetime estate and gift tax exemption is expiring. That's for ultra high end taxpayers. So proper planning is required there. Qualified. This is a huge one, Jodie. Qualified business income deduction is expiring. That's a 20% deduction off of your business income. So if you make $1 million profit right now with this qualified business income deduction, you shave off 20%, $200,000, and you only pay tax on the $800,000.
Wow.
That's going away. So your income will, even though if you make exactly the same amount, your income on the tax return will show $200,000 more than it did last year, just because the qualified business income deduction is expiring. That's a big hit that small business owners will get unless they extend it. And I really hope they will extend this, because it's going to be really tough for us to explain to our law firm partners why they're showing $200,000 more, again in $1 million example,